I am a strong believer in data. I believe that whoever analyzes the data the best, whoever can figure out where the capital flows are going, can outperform the market. Now, we have been able to time the Ethereum market quite well. And we're going to look at very interesting data points one more time in this video. Here's probably one of the most common advanced charts of Ethereum. It's the Ethereum dominance. How much of all of cryptocurrency's market cap is currently in ETH? And we have been anticipating the bounce in the last few weeks because we got very close to the historical bottom in Ethereum dominance, the one that we formed in September of 2019. So at the bottom, 7% of the entire cryptocurrency market cap is in Ethereum. At the top, it's around 20%. And historically, we have been trading in that range. Now the question is, will Ethereum continue to outperform or will it come back to its prior lows? That's what we are trying to answer in this video by looking at various data points, the usage of Ethereum, the tokenomics of Ethereum, the overall setup. Now here's the problem. All of crypto is highly correlated. So when Bitcoin is going up, when Ethereum is going up, then most altcoins go up as well and vice versa. So things don't necessarily go that much independent from one another. They're just differently levered. And so when we look at the market cap of Ethereum here at the top in green and the market cap of the altcoins that's here in white, it seems like it's the same chart. Just have a look at this. There isn't too much of a difference. When the altcoins are high, Ethereum is high as well. When the altcoins are low, Ethereum is low as well. Does it really matter if we buy Ethereum or if we buy a broadly diversified basket of altcoins? Now what we see here at the bottom, by the way, that's total 3. So it's the market cap of the altcoins that are not Bitcoin and not Ethereum. Now there's a reason why those two charts look so similar. It's because a lot of altcoins are directly coupled with the Ethereum price. Have a look at this. This is the largest trending tokens on the Ethereum chain. And most of those liquidity pools are not versus stable coins. So we've got this here for Ether and for Prompt, but for most other altcoins, they are versus wrapped Ethereum. So the ratio of the altcoins relative to wrapped Ethereum, that's what's determining the price in the liquidity pool. When wrapped Ethereum is going up by 10%, then automatically, without a single trade ever happen, the altcoin in the pool also goes up by 10% in US dollars. And this is then also true for a lot of the layer 2 blockchains on top of Ethereum. Base, for example. Here are the trending tokens on Base, and again, many of those tokens are traded directly versus wrapped Ethereum. And of course, it's the same for Arbitrum or for Optimism as well. That's why those two charts look so similar. But similar doesn't mean it's exactly the same, right? There's still swapping happening between Ethereum and the altcoins and Ethereum. So let's do something here. Let's calculate the ratio between the two. So the altcoin market cap relative to the market cap of Ethereum. So here we go. ETH divided by total 3. And this chart starts in July of 2017. And sometimes the altcoins outperform Ethereum. Sometimes Ethereum outperforms the altcoins. We can see our bounce here recently. That's when the Ethereum dominance also went up. And it shows that Ethereum outperformed most alts. Now we could either assume that this is just a constant sideways trading range and sometimes money moves to the alts, sometimes to Ethereum. We could also work with the assumption that Ethereum long-term underperforms the altcoins because those tops also kind of align, and the same is true for the bottoms. So we don't really know where the exact support and resistance is, but in the worst case, the potential loss of Ethereum versus the altcoins is 26%, and in the best case, we've got a gain of 110%. So the risk to reward still looks very good for Ethereum, even though we've already rallied quite a bit. In the grand scheme of things, it doesn't seem like Ethereum is overpriced, at least relative to the rest of the market. Now the market as a whole is expanding, right? This is how much money is flowing out of the market or into the market. It's a stablecoin market cap. It's positive since October of 2023. But let's now have a look at how is Ethereum performing relative to the stablecoin market cap. So is Ethereum doing better long-term compared to how the market as a whole is expanding and contracting? So here's the Ethereum market cap. Here's the stablecoin market cap. Let's divide both and we're getting this chart. Ethereum underperformed the overall market expansion. Isn't that interesting? This chart starts in September of 2019 And to today, we've got an underperformance of 73%. The potential rally to the resistance is roughly 80%. But then we also have to look at the relative performance to Solana, because Solana is the largest competitor. There's more trading happening on Solana, even though there's less capital on the chain. Here is the Ethereum market cap relative to the Solana market cap. And is it really a coincidence that those bottoms align so well? And same is true for the tops. I don't think so. I don't think this is all just randomness. Since December of 2022, Ethereum tends to underperform Solana. We have bounced just recently with the dominance rally, and the potential upside versus Solana isn't that large. It's only 30% or so. So versus the altcoins, Ethereum is very cheap. In the grand scheme of things, versus the stablecoin market cap, there's 80%, still somewhat cheap, and relative to Solana, it's somewhat balanced. The short-term momentum, of course, is rather bullish. But then of course we've got tokenomics, right? As in how many new tokens get issued over time, or how much are early investors and insiders, etc. selling over time. This is better for Ethereum than for Solana. The Solana circulating supply increased since the beginning of 2022 by 67%. Here is the Ethereum supply since the beginning of 2022. Initially we had our expansion, but then came the merge. This was the move from proof of work to proof of stake, and since then the supply isn't growing that much anymore. It depends on how much Ethereum is used, but we are somewhat balanced, as in we can almost work with the Ethereum supply not really changing that much. But the Solana supply is definitely still changing. It had been 12% in the last year. Now, if we expect that Solana will, for every single year in the future, grow by 12% more than Ethereum, then Solana is a good buy. If we think that Solana will grow slower than 12% relative to Ethereum, then Solana is not the right thing to buy. And so how quickly will Solana grow relative to Ethereum in the future? Let's have a look at the decentralized exchange trading volume. So that's over here for Ethereum. It seems to be somewhat stable for the last 5 years. We tend to trend somewhere around 60 billion of monthly trading volume. Here's the trading volume of Solana. It was much higher when the Pump.fun ecosystem exploded, when everybody was trading small meme coins. But since then, when it was almost at 260 billion, it shrunk quite quickly. Now it's also at 60 billion. So will it stay at 60 billion? Will it shrink further? Will it grow further? Who knows? Currently, the momentum is not in favor of Solana. Currently, trading volume tends to trend down. For Ethereum, it's quite likely that we'll continue to see this trading volume in the future. For Solana, we don't know. There's much more volatility in the volume. Now, here's something very important to understand. Crypto is highly correlated, as in when the market tends to go down, everything goes down at the same time. There's very little variation. This is true for the bear case, but it's also true for the bull case, as in most things go up at the same time. There seems to be not so much benefit in diversification, as in it seems to not really matter what kind of token we buy. If we have 5 tokens or we've got 20 tokens, the portfolio tends to move in the same direction anyway. Now, the reason for those synchronized ups and downs in the market cannot just be money flows, because the money is flowing in and out of the overall space relatively consistently with little volatility. What we've got over here is the stablecoin market cap. And since October of 2023, we tend to go up over time. So there is money getting into the system. People deposit their fiat currency, say on a centralized exchange. The centralized exchange then sends it over to a stablecoin custodian. The custodian holds the funds in a bank account and then mints the stablecoins on the chain. And we can see that minting, but also the redemption on this chart. So the volatility that all prices go up or all prices go down, it's not caused by money flowing in and out of the system as a whole. Instead, I believe it's caused by the swapping activity. So people going risk on or going risk off. So it's not the market as a whole expanding or contracting, it's the participants within the market that swap. And we can see that swapping activity with much more volatility here. So this is now the stablecoin dominance. We're not looking at the stablecoin market cap, we're looking at the stablecoin dominance. How much of all of crypto is in stables? And in the last 1.5 years, this tended to move in a range between 9% and 5%. And now compare that stablecoin dominance with the Bitcoin price. When the stablecoin dominance is low, it means the Bitcoin price tends to be high. When the stablecoin dominance is high, it means the Bitcoin price tends to be low. So there is somewhat of an inverse correlation. When people deploy their stablecoins, or when they're swapping from risk off to risk on, when stablecoin dominance goes down, prices tend to go up. And so because of that overall effect of market synchronization, because of the high correlation, things move in the same direction at the same time, it's not a good idea to just look at US dollar prices in order to make a good decision whether or not to buy or sell an altcoin. Because charts like this are also influenced by the overall market swapping activity, not just by the swapping activity within the altcoin. So for example, this here, right? This is Dogecoin. And who would have thought that Dogecoin already peaks at 46 cents when in the past it peaked at 56, 57 cents? Who would have already anticipated the peak earlier? How could we figure that out? Here is how we can figure that out. This is Dogecoin's dominance. And here those two tops align very nicely. And so a dominance chart is simply a chart that looks at the current market cap of an altcoin relative to all of crypto. So that way we remove the ups and downs of Bitcoin or of Ethereum. We are just looking at the relative performance of the altcoin versus the rest of the market. And again, that tends to trade in ranges. And that's how we can find out how the second peak should actually happen earlier in US dollars, because the dominance was already at historical heights. But check out this, right? This is Shiba Inu in US dollars. But here's Shiba Inu's dominance. So we do have a quiet constant trend. Over time, Shiba Inu tends to underperform the rest of the market, and when we are high on the trading range, it might make sense to bet on falling prices. When we are low, we could potentially buy, but of course it's always somewhat risky to buy low when the overall trend is also bearish. So I personally prefer, when there's a declining trend, to look for short opportunities, so to bet on falling prices when we are high, and when we are in an upwards trend, to buy the dips. So when we're in a bull market, we buy the dips. When we're in a bear market, we short the top. And so Shiba Inu underperforms the market over the long term. So instead of trying to fish for bottoms here, isn't it better to just wait for the next short squeeze, to wait for the next rally in the price, to then bet on falling prices? Then the time is also on our side. Even if we see a bit of a spike above the regular trading range, we can just wait it out, because the overall trend is in our favor. That's not necessarily true when we buy, right? When we buy low in a declining trend, we might not find the exit on time and then have to sell again, potentially lower. Another example, here's Chainlink. And what we see over here, that's Chainlink's dominance. So just according to this chart, it might make sense to potentially buy some Link over just Bitcoin or Ethereum. Historically, it's rather cheap. Now, there are two central reasons why I like those relative valuation charts and those dominance charts. The first one is that we can actually see what happens specifically with that token, completely independent of the overall market. But the second reason is by plotting relative valuation charts, so say cryptocurrency A versus cryptocurrency B, we tend to see less volatility. We tend to see the trends clearer. For example, over here, this is the Ethereum price in US dollars since February of 2021. There's no clear trend. It's not necessarily easy to figure out when to buy or when to sell. But then we've got here Ethereum relative to Balancer. I like to look at this chart because it gives us two nice points. First of all, the overall volatility is rather small, but secondly, the gains are also extremely consistent. So this is an outperformance of 5,400%. This is how much Ethereum outperformed Balancer. And again, relatively speaking, with not that much volatility. Getting that much performance in a such consistent manner without having to time the market actively, that's quite unique, right? This is a risk to reward that we can only get with relative valuation plays. We can't get this just by buying something in US dollars. And again, the reason why everything in US dollars fluctuates so much is because the market as a whole goes risk on and risk off all the time. And that creates massive additional volatility. But we can get rid of that volatility. We can actually make money by buying this. Now, we don't just buy this, we have to set up a long Ethereum and a short Balancer position. So to get this performance, we have to do a bit of quote unquote financial trickery. But yeah, why do we see such consistent outperformance? The reason is that Balancer over time tends to have an expanding token supply. And a lot of that additional supply goes to liquidity mining. So to a lot of people that just get continued allocation to the token that then sell it off over time. And so this then differentiates the winners from the losers long term. The people that are willing to take one step further, they're going to look not just at the next 100x meme coin, it's likely going to go to zero, but that actually figure out what are the dynamics within the market and how can we profit from those dynamics. Those people tend to do better than just the people that buy and hold Bitcoin, for example. I have made dedicated tutorial videos on the topic. First of all, how do we even plot those relative valuation charts? How can we look at them? There's an entire tutorial section just on how to use TradingView in a proper manner and seeing the things that most people don't, right? Most people just look at things like this. This is not giving us any edge. But then there are also videos on how to actually execute those trades. How can we gain from relative valuations? How can we set this up? How can we continually make money with comparatively little risk? Now, most people here on YouTube are not willing to share their own performance, but I'm okay with doing that. I'm okay to share how much money I'm making on average over buying and holding Bitcoin. Because this is again where the big differentiator is. Everybody can get Bitcoin's performance, but actually the art in this is to make more than Bitcoin. If we take the time to trade actively, we have to outperform the benchmark. Now here are the monthly returns that I have made over buying and holding Bitcoin. So every data point is a month. This dotted line here is the 12-month moving average. And when we average out all of those dots, the monthly alpha over buying and holding Bitcoin for me is 2.1%. Now that might not sound like much, but that compounds over time. And then especially if we also add more money in the portfolio over time, we dollar cost average in, we have a quite nice smooth growth curve. So here's my active portfolio with trading and dollar cost averaging. And I hope that over the next 2 to 2.5 years, I'll be able again to double that portfolio. If we of course use leverage, we can make much more on a single trade. But I'm super cautious. I take very small bets. For example, have a look at this. I'm sharing my own trades. This is in the Gerhard Trade channel, and I opened again, based on relative valuations, a short of the Donald Trump meme coin. Trump relative to Solana was quite high, and it started to come down. And then our members also entered. They also had some leverage in there, so this was some gains. I waited a bit longer, closed this then at 141%. But because I only use 1 or 2% of my entire portfolio on a trade like this, the average alpha per month is only 2.1%. But if you're willing to take on more risk, you can of course grow much faster. Actually, our members do exactly that. So here's the channel, share your wins with some leverage and proper market timing and still reasonable risk management. There are several 100% in single trades easily possible. And so I think it's very important to forget about price targets, as in can Ethereum hit $4,000 or can Dogecoin hit $1, etc. Those kind of things don't really matter. What really matters is the relative performance. Capital within crypto moves from asset to asset. Attention moves from asset to asset. So there is all of the capital in the space. Sometimes it is risk on, sometimes it is risk off. But what really matters is where is the capital flowing to and where is it going away. And then all we need to do is to trade the relative valuation. It's much easier to make money that way. Again, would you rather hold this or would you rather hold this? And so yeah, feel free to check it out. It's currently $125 per month. You are locking in that rate. So when we come back to the 165 again in a few months, then you will still continue paying the 125. Whatever you're paying now, you will continue to pay. I will not increase the rate for everybody that's signing up now. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be also somewhere a pop-up here on the right where you can click directly. It will lead you to the website. So see you over there. Cheers.